Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that.
Alright folks, here we are on Wednesday, April 2nd. We're going to take a look at SPY, QQQ, Apple, Tesla, and NVDA today, and a quick breakdown of the overall sense of the market, which you see right now is absolutely plummeting in the after hours. Even SPY is down over 2.5% just since the market closed a little over an hour ago. And you just don't see this motion. QQQ down over 3% just in the after hours. As a reminder, there is something called a level 1 circuit breaker that occurs at -7% on the S&P 500. You can look up level 1, level 2, and level 3 circuit breakers to get yourself acquainted with those. I've been tweeting about them for about a month or so, trying to refamiliarize folks. And the reason for the last 4 weeks I've been saying, watch out for the crash. When we've had these sort of brief run-ups, I've been saying, don't get trapped. For one, the first reason that I called it out was sort of a confluence of events. But if you look here on SPY, for example, you see the TTM squeeze indicator. Brief trigger, fire, nothing really happened. Lengthier trigger, fire, and that's when we started to absolutely plummet. We don't see this SPY triggering and firing very often. And if it does, it's often a very brief series, like a 2-candle trigger. I think there was a single candle trigger, right? And that did, kick off a pretty decent drawdown, but then the recovery was much more vibrant. So right now we have yet another, today's candle that closed was another trigger candle on the TTM squeeze indicator. TTM squeeze indicator is looking for outsized moves or like big increases in volatility. So the fact that it triggered and fired back here, nothing remarkable happened. Triggered and fired here, that set off this current rundown that we're seeing. And now today it's starting to trigger again. It's just telling me that there is compiling, even just chart structured effects that are showing clear signs of increased volatility. Now you couple that with the administration, and this is not meant to be a political video, but love it or hate it, the administration absolutely puts a lot of uncertainty into the markets, and markets do not like that. You know that. That's an old adage. Add to that the fact that coming into this year, the Buffett indicator was at overvalued and quite significantly overvalued. And so stocks were probably set to correct to some degree anyway and get more toward par value or fair value. And so you combine all of these things together, chart structures, a lot of uncertainty coming out of a world leader, the US administration, all of that uncertainty that comes into the market, and then Buffett indicator showing, hey, these stocks, just per some simple equations, are overvalued. They're juiced. And so sometimes you have to squeeze the juice box a little bit. And that's what I think we were going to see anyway. But this could really take that sort of standard occurrence and make it into something that, well, I was going to say nobody's going to have fun with, but turn it into something that short sellers and folks who know how to play the downside to the market are going to be pretty comfortable with. So levels. But that's how we got here. That's why I've been talking about this for 4 weeks or so. And on these little pumps, I've been saying, don't get trapped. Oh, the other thing to watch for on the pumps that just scream to me, this isn't over. I would consistently see fund managers and asset managers coming out and saying, oh, this is a great buying opportunity. This is where you want to jump in. Why in the world would people who are managing the largest and most successful funds with huge amounts of assets under their belt, why would they care about tipping off the retail investor that now's a great time to buy? They wouldn't. But what they would be interested in doing is wanting somebody to buy that little pump so that they could offload. In other words, turn you into a bag holder. So seeing that, I was also like, you know what? This is people, they're looking for bag holders. And that seems to be the case at the moment. Now, SPY levels. The 183 EMA, all important here. We see even today, before this drawdown in the after hours, it was sort of rejecting the 183 EMA. That's the important thing to watch. If it's pushing off of this 8 EMA, that is typical sign of watch out. There's more bearish momentum here to be exhausted before this is through. That's just standard across the board. So I'm not going to like harp on it in any one particular stock. You can just throw up the 183 EMA, throw up the 8 EMA, whatever, and just track it that way. Levels wise, as I have it here, what I had been saying in that first video I put out was healthy pullback to me would sort of stop right about here. Maybe we get a little dip toward this area. So being that we're sort of cruising back toward that 547 range, if we lose it, I have 529 down here, and if not, then I think we run a strong risk of sort of accelerating and racing ourselves toward 500. I do have a 507 level here that we would hit in that approach, but those are some potential areas. At this point, I'm more apt to say 529 to 507 are more likely than less likely. Now, of course, things being as erratic as they are, could the administration change its mind, do something totally off the wall to try to rescue the markets just on sort of news catalysts? Yeah, for sure. Will it be true? And will it sustain? I don't know. But I would say be on the lookout for those things. If there's still any indication of Trump wanting to be the Trump that he was in 2020, which was rescue the markets at all costs, he had no stomach for wanting to preside over a rapidly declining stock market, and that showed. I don't know that he makes those decisions the same way this time around, but I would watch for that too and see what sort of pump comes from perceived like really good news. QQQ wise, pretty similar in terms of the levels that we're looking at, but again, the levels that I'm looking at as being more likely than not at this point, 447 to 422. And again, I'm not saying these are like automatic buy levels, but these are levels where you should get some buyers coming in. I don't know if it will persist or not, right? You could get a brief little, buying frenzy like we saw here, and then just get crushed in subsequent days and weeks. Apple already had come down to this 209, so it's pulling back harder than, say, SPY and QQQ based on the levels that we have on the chart. It's reached a level lower already. But this 209, I'd look at it to race back toward there. I guess it's almost there already, so speak too soon. But 209 and then 195. Below that, there's a huge gap here. First of all, there's a literal gap down here. This is like in the 180 range or so that would get into this gap that is unfilled. So there's that I would look for. But if things got really extendedly drippy, you have 155 down there. I don't know. Things would have to be really chaotic. But there you have it. Tesla. Now, Tesla is a little bit different. I pointed out the other day, that's why these arrows are on here, made a video and I pointed out, see this candle here? See this candle here? See what happened after both of them? See this candle here? See how it looks very similar to the structure? That's what you call a shooting star. And when the shooting star happens at the top of a swing, so in other words, you had this pullback, and then you had this brief swing up, and this shooting star happened at the top of that, and it bled back down, and then you had like a 3 candle swing up, happened at the top, bled back down. Here, you had a few candles swing up, right, and you had another shooting star get placed right there. that was after this one here, which you would call a hanging man. And you can look that up as well. And so those coming in back to back, I pointed them out with these big arrows and I said, hey, watch out. Because, Tesla is more prone to the news cycle than maybe any of the others, because there's such a strong interlinking there. Oh, wow. It is now lost more than it had gained today, even though it had that big booming day, plus 14. And in the after hours already, it's down 16. So in any case, Tesla is more inextricably linked at the moment, for better or worse. So I would just anticipate its swings have been wilder. So if the overall market is getting volatile, and who knows, maybe it goes counter market sometimes too, right? But if the overall market gets volatile, I would anticipate until things just get to an obscene price point where they don't make sense anymore, I would expect Tesla to show sort of outsized moves in correspondence or in antithesis to the market moves. Oh, sorry, I should have told you levels. So levels I have down here, I had said a few weeks ago, Tesla will see 200 before it sees 400 again. It was a call that I made, and we'll see. I still stand by that call. If it does see 200, somewhere between this 206 and 190 be what I'd look for it to come into play, but it does have a lot of levels to get through to even get there. 242, 222, right? And then you see, and if things get real leaky, 167, 138 you have down here. So we'll see what that looks like. NVDA, again, looks a little bit more like Apple, right? Not purely structure-wise, but just the levels that it's reaching to, right? It's down an additional level beyond where QQQ or SPY is. So NVIDIA has been taking an additional brunt, if you will. But it's bouncing for the time being, or trying to bounce off that 104, though it's back down there again in the after hours right now. So we'll see if 104 can hold. If it can't, I do have a big price gap here. Again, not a literal gap, just a price gap. There was this previous gap that was briefly filled, sort of mostly one candle and a fraction of a couple other candles. But so you could, consider that that's there. And that, that level I have down there is down to about 90. So we'll see, then I have a huge gap here down to 52. But again, if we're getting anywhere near a 50% downturn, on top of the downturn we've already seen, it would be a third of the price of where it was, when was this? January 7th. So, yeah, I don't know that we get there, but the levels are there anyway. But just to have them. So that's my look. Again, that's why I've been calling it out. It was this that immediately tipped me off. Something seems askew here. Plus, I'd been watching it because of the Buffett indicator, like I talked about. And just knowing that there was likely chaotic times ahead, if for no other reason, sheer uncertainty. That's probably the best case scenario. It's just sheer uncertainty. But beyond that, it could get much worse. It could be sheer uncertainty and then just absolute horrifying policy decisions that put a lot of people and companies in really bad shape. So we'll see. But this is sort of live after hours situation at the moment. I mean, ugly. You don't see this. I never know how long people that are watching these videos have been in the market. I tend to assume like maybe not decades. So, but I could be wrong. But it's a rare event when you see these kind of moves literally in the after hours, not the futures market, but literally just in the after hours. People, dumping for sure. We'll see if or where buyers step in here. I would watch out for these inside candles. You can look up that term as well. But yeah, there we are. All right, folks. Well, I hope that you had a happy hump day. And as always, I appreciate you watching, and I will see you in the next video.